Okay, we got the GDP numbers and they were better than expected. Effectively, the US economy grew by 3.8% versus the forecast 3.3%. And so now the markets are worried that the economy is heated. And because the economy is heated, that the rate cuts aren't going to come as quickly as we initially expected. And so what's going on in the markets right now is you've got Bitcoin breaking down actually below the $111,000 level. You got ETH, which is broken down below the $4,000 level. Now, obviously, starting to climb back up. And a lot of people are basically saying, look, this is the end of the correction. It's time to start buying. Guys, I'm not buying yet. And I've told you from 120,000, it's not time to buy yet. And I'm going to show you again today when I'm going to start buying. And let me tell you, it's not yet. Then after that, what I want to show you is a tweet that I read, which I think is a very, very pertinent tweet. It talks about Tom Lee, and it basically says that Tom Lee's ETH thesis is retarded. And, you know, it does sound pretty harsh, but I do think we have to speak about it because you have Tom Lee on TV now, and he's, you know, calling his book or talking his book, and we have to fact check his book to see whether it is talking his own book or whether the thesis is actually valid. So we're going to go through this tweet from Andrew Kang around Tom Lee's ETH thesis being retarded. I didn't say his ETH thesis is retarded. That was somebody else. I just used the quote. Yeah, so we're not deploying money and Tom Lee's ETH thesis is retarded. Wakey, wakey, rise and shine, because summer bodies are made in winter and good portfolios are made in corrections. So wakey, wakey, rise and shine. We've got a lot to be doing here, even though it's not really time to, someone's got 𝗕𝗰𝗆𝗆. Someone's got 𝗕𝗰𝗆𝗆 here. Are we going back to 𝗕𝗰𝗆𝗆? We're going back to 𝗕𝗰𝗆𝗆. Yeah, we've got a lot to talk about today because, you know, I hear a lot of people saying there's no way that the Bitcoin is going to go down any further. Guys, yeah, Bitcoin is going down a little bit further. Stop lying to yourself. Stop trying to deny it. Right now, if you look at the market structure of Bitcoin, I'm going to take you back to the 4 hour. What you can see is that you've got a lower high over here, right? Maybe on a short time frame, you've got a slightly higher high, but now you've got a lower low here. And so the market structure isn't looking very good. I don't really think that it's time to buy yet. And it's not only Bitcoin. I mean, ETH also now below the psychological level of the $4,000. And if you look, researchers, if you could just send me the treasury companies, but if you look at the treasury companies, they're not buying anymore. So you have like this no Wall Street, you don't have the Wall Street bid coming in anymore. And we need to discuss it. We need to discuss all of this. And then, of course, we are going to talk about Tom Lee's ETH thesis being retarded. So listen, guys, if you're not already subscribed, subscribe. And also, if you are here, let's like this video. Let's get distribution of this video. Let's go crazy. Go quack, 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 obliterate the like button. What caused this little dip? Well, the GDP numbers. So let's break it down very quickly. GDP numbers higher than expected. Economy hotter than expected. Hot economy means Powell can't reduce rates. Powell can't reduce rates. Markets get angry or markets start to get worried. And that's what happens for today. And tomorrow they'll forget about this and they'll just carry on. They'll just carry on with their days. But for today, not looking so good. Everything's red. The bubbles are red. Oh, look at plasma. Well, what a plasma. Okay, 7.7 billion. We'll talk about plasma. The bubble's red today. Everything red today. Buying opportunity or maybe end of the bull market. I did see a lot of tweets around the end of the bull market. We'll talk about that. We will talk about that. As I mentioned, even though we are breaking down below these key levels, guys, I am not buying yet. I said it to you very, very, very simply. Why am I not buying yet? We've broken down below the 4,000. On Solana, we've gone back under the $200 level. I'm going to start buying only on one indicator. For me, there's literally only one indicator. There are two things. There are two things that can get me to deploy money in this market. The first thing that can get me to deploy money in this market is inside information. If I have inside information, I will deploy money. The second thing that can get me to deploy money into this market is the fear and greed index going into extreme fear. Why? Because when the fear and greed index goes into extreme fear, there is 100%, get this, it's right 100% of the time. Fear and greed goes to extreme fear. That is when we start deploying. Where are we on fear and greed right now? We're at 44. Okay, 44 is for ants. 44 is not even a correction. 44 is on the cusp of neutral. That's not a time that you want to be deploying the last of your cash. If you're here and you haven't deployed 1 cent, okay, then maybe you can start buying. But if you are deployed, more than 60, 70% of your capital allocation is deployed. You don't deploy money when the fear and greed is at 44. Because look at the chart of the fear and greed. Okay? 44 is not a place where this thing usually turns. It's going to turn when it gets a bit lower. And that's why I think that this correction may actually continue for a bit longer. And I'll show you a lot more data. But for now, we ain't deploying. I know there are some people that are deploying, but we ain't deploying. By the way, what I saw here is that this is, by the way, Coin Market Manager. They have this thing called Hyper Tracker. And what they do is they index all the accounts. And they start off with indexing the shrimps, which are the smallest accounts. And then they go all the way up to this, what they call, how do you say it? Pronounce this? Leviathan. I know how to say it in Hebrew. Leviathan. What is that? That's a big whale there.
Leviathan.
Yeah. I know in Hebrew it's Leviathan. So, long story short, the biggest cohort, the biggest whales on Hyperliquid are bearish at the moment, right? That's the people that I actually want to be following. By the way, if you want this, you can go and check it out, app.coinmarketman.com/hypertracker. So exactly, Charmander, he sees it. He sees it. He knows that we just sit on our hands in times like this. We don't buy anything. So what is causing this correction? So today's little dip was caused by the GDP numbers. The actual correction though, the actual pullback in Bitcoin, now people are starting to attribute it to the Treasury General account. Remember I spoke to you about the Treasury General account. And I said to you I was a little bit worried because what they did was they spent from 850 billion all the way down to 290 billion. Someone says, Alessandro says, a Leviathan is a sea dragon. Those must be bigger than whales. It's like they don't even exist here. I've got my own ChatGPT, by the way. So as you can see, they depleted the Treasury General account. And now they're refilling the TGA account. At its low, the TGA account was at $290 billion. And when I looked this morning, what I saw here is that it's at $822 billion, which means that for the last 30 days, they've been refilling the TGA, which means that for the last 30 days, they've been taking money out the market. Not the last 30 days, the last 60 days. The last 60 days, they've been taking money out the market, right? And so now remember that the M2 money supply chart and the Bitcoin chart have a 60-day lag between them, right? Which means that this is the chart of the M2 money supply. Let me actually make it a little bit more accurate. I'm going to do it with 60 days. So 60-day money. So now I've created a lag between the Bitcoin chart and you can see that lines up, I would say almost perfectly. Like look at that top over there. Look at that top in the money supply over there. So when the Fed takes money out of the economy, effectively what they're doing is they're decreasing the money supply, right? That's what they're doing. They're taking money out of the economy, decreasing the money supply. When they decrease the money supply, with a 60-day lag, what happens is we start to get a correction. So you can see that they started refilling this account exactly July 16th. We are in September 25th, which means that now we are starting to feel the effects of the last 2 months where they've been emptying out or emptying out the economy and refilling the TGA account, which by the way is now almost full. There's 20 billion left to buy. And so at a macro level, that's probably why we are feeling the air come out of the markets a little bit and the euphoria come out of the markets a little bit. Why? Because the Treasury General, the money supply affects the risk assets the most, right? So the heavy assets, the industrial assets, they are much harder to move. The assets that move the most are the smaller cap assets, specifically at the bottom of the liquidity table and the top of the risk table, which is exactly where crypto actually lands up falling. And that's exactly what's happening right now. So you can almost think about this, like we are moving in perfect harmony with the money supply chart. In general, the trend of the money supply chart is actually up, right? But at the same time, the Fed has just removed $500 billion from the money supply. That would be the equivalent of taking this and reducing this from here all the way to, I mean, wow, just look at it, like $500 billion is quite a big amount here. Like you'd have to reduce it from here all the way down to here. So it's quite a, it's what the Fed have done is quite a big thing. Like they've taken out a lot of money out of the economy, right? And that's effectively what's happening. When this is finished, we will catch up. We will continue to go back up the money supply. I see Sunny's in the house. Sunny doesn't miss a show. The other thesis around this correction is the Ben Cowan thesis. And what Ben Cowan is effectively saying, he's saying, look, the S&P is currently at all-time highs. And it's actually becoming relatively expensive. In fact, on 19 of the 20 valuation metrics, the S&P is becoming quite expensive at its current all-time highs. Now, what Ben Cowan says is he says the S&P year-to-date ROI to average post-election years, he said late September to mid-October could be a weak time. We could see a slight pullback, maybe a 5% pullback. He says this cycle, BTC is often bottomed early in on the SPX correction and leads the way out of it. So almost like Bitcoin bottoms first, and then the S&P bottoms. And he's expecting the S&P to actually start coming down. He also looks at another chart, and the chart that he looks at is the S&P divided by the M2. So what that chart basically shows you is it shows you the S&P performance when you take into account the movement of the M2. And what you can see on that chart is we're hitting a critical resistance point. Now, every other time that we've hit that resistance point, we started to correct. Here we corrected 70%. Here we corrected 14%. Here we corrected 10%, right? Every other time that we've been above this line, we start hitting resistances. And this is, again, specifically, it's the S&P 500 divided by the US M2, the US money supply, right? So that is the thesis that we could get a correction in the S&P 500, and that Bitcoin's actually just preempting the S&P 500 correction. The other indicator that shows us that we could be not yet done with this crypto correction is the Bitcoin dominance. So Bitcoin dominance seems to have bottomed and starting to climb up again, right? So you're almost like seeing a bottom here, and we're actually like starting to possibly start climbing up again. You can see like a little bit of a turn here. Now, the Bitcoin dominance would outperform when the altcoins start crashing and people run back into the safety. And that's exactly what's happening. The last couple of days, or specifically, I'm looking at it in weeks, but we can put on to days. I think it'll just make it a bit easier. When you look at days, since about the 25th of August, here you can see that we actually bottomed. Now, where did we bottom? We bottomed on the 13th of September. What is the 13th of September? Well, that's exactly 2 months after the Treasury General actually started to take money out of the economy, right? And so now we're bottomed here, and we're starting to move up on Bitcoin dominance. Now, traditionally, in October, the Bitcoin dominance has its best performance. When Bitcoin dominance has its best performance, it means that Bitcoin is outperforming the altcoins the most in October, which means that in general, if we have a correction in September, it means that Bitcoin recovers first before there's confidence in the altcoins. And that's why all of a sudden you get this, the Bitcoin dominance running. An increasing Bitcoin dominance isn't necessarily a bad thing, providing that it's happening when both Bitcoin and altcoins are going up. If you get a situation where the dominance increases because Bitcoin and altcoins are going down, that's usually quite a fearful situation. And so right now we are getting a bottoming of Bitcoin dominance and a slight increase in Bitcoin dominance. And then that again almost says that we're heading in for some kind of correction level. Again, Ben says that could go to 60% plus. We're not far away from 60%. We're at 59%. So like maybe one more. And that's why I don't think that if we get a correction, I don't think that this is going to be a very big correction. I think we're not at the end of the correction. I think the levels, as I've said to you guys that I'm watching, there's a couple of levels for me that I'm watching in this correction. The first level that I'm watching here is this level over here. Because this level over here would be the level that we put in a lower low. So if we break the 107, we put in a lower low. Now, again, I think we're going to break the 107. I think the next level after that is this level over here. And that means that we've got to hold between 107 and 101. Now, that's where I think we actually bottom. I think we bottom somewhere between 105 and 100. However, I think that in the bottom, we're going to get a breakdown below 100. That's going to be the blow off bottom, if you want to call it that. That's going to be what shakes everybody away. And that's when we actually start turning. So I'm not changing my thesis. I'm sticking to my thesis. My thesis for a long time has been that we're going to bottom between 105 and 95, let's say. And I even took Sheldon that bet, right? And I'm going to make him pay it back. You know, I actually thought today, if we get to between 100 and 105 before the end of October, Sheldon has to take me on a weekend somewhere, right? And what I decided is I actually wanted to take me to the F1 in Vegas. That's where I want to go. I want Sheldon to take me and him together. We'll go on a boys trip to the F1 in Vegas. I want to see Sheldon get that past his wife. Where are you going? I'm going with Ryan. Where you go? To Vegas. Yeah, right. But you know, a bet's a bet. And I have it in, you know, when you say I have it in writing, I don't actually have it in writing. I have it in, what do you call it? I have it in, hold on a second. Let's try and find it. No, it's not that one. Here we go. It's this one. I have it. I have the proof. So you can't chicken out of this one. I've got it. Here it is. Here, I'll show you. You can't get out of it.
Did you see a show yesterday? We're going lower. So I asked him now, I'm like, why are we going lower? I'm like, he says we're going to 100. I don't know.
100, 105.
But why? What's your thesis?
Because we need a correction.
We've had a correction.
From 125 to
108. How much more you want to correct, bro? No.
What's the bet? What's the bet? What's the bet? A weekend in Amsterdam, Ibiza. Give me the bet because you're going to pay for me. I'm going to pay for you. We're going to go on a weekend together.
Oh, I like that.
Okay, so weekend. You heard it, yeah. Sheldon, I'm going to make him pay this bet. I really want to go to the Vegas Grand Prix. I haven't been to that one. So Sheldon is going to. I really believe that he's going to lose this bet. So my levels again. What are the levels that I'm actually looking out for? First level is this level over here. I think we break below it, 107,287. Then below that, you can look at, you look at the bull market support bands. Those are pretty much gone already. The next level is this 100, the 50 SMA, which by the time it actually gets there, will be at 100K. That's my level, 100K with a little wick down to really make people scared. And then we carry on moving back up. So now, having said all of that, I know that there's a big, I don't think this correction is going to be a very long correction. And there's a few indicators that show me that it's not going to be very long. When I say it's not going to be very long, I don't think we're in for like 70 days, 80 days, 90 days and stuff like that. I think that very soon we're going to get a little bit more panic. We're going to get another monstrous red candle, and that's really going to be the one that starts really putting people into a panic, right? People are starting to get scared, not very scared. Like the fear and greed has dropped a little bit. Also, if you look at funding rates on ETH, so funding rates on ETH have now gone negative, right? Now, when funding rates on ETH actually go negative, generally the market in a bull market, that's generally the market actually starts moving. So you can see like here, when funding rates went negative, we started moving up again. When funding rates were negative here and here, we started moving up again. But it does take a little bit of time. Like, so you can see funding rates go negative here, and we only actually started climbing 3 or 4 weeks later. So I do think that in the next 2 to 3 weeks, we bottom, and we bottom at around 100, 95 to 100. And then from there, we actually move. Now, here's the big question. So this is the Bollinger Bands on Bitcoin. What this shows is it shows how tight the Bollinger Bands are. Now, when you say tight Bollinger Bands, what it shows is that on the weekly, Bitcoin is due for a move. Why? Because there hasn't been volatility for a long time. Now, generally, when you get to periods where there's low or no volatility, generally you land up with a move. And you land like here. You see, we bottomed here, and you can see that there was a big move up. If you look here, we bottomed here, and then there was a big move up. And if you look, let's go a bit further back. You look here, we bottomed here, and then we started a big move up, right? So there is a big move due on Bitcoin. The Bollinger Bands are telling me the same thing. Just the volatility measures, all the volatility measures, the implied volatility, are all showing that Bitcoin's volatility is now very, very, very low. Generally, when you get low volatility, then you get a spike up in the price. And then the question is whether Bitcoin actually goes and catches up to gold, because gold is at all-time highs. Generally, Bitcoin tracks gold. You can see that generally gold goes up and then Bitcoin basically tracks it a little bit later. And so the question then becomes when do we start this catch-up trade to gold? I don't think it's the end of the cycle. Like, I have seen some tweets saying, nah, it's the end of the cycle, it's the end of the cycle. And look, I get where they're coming from, right? Because if you do take the 4-year cycle, and then you say, okay, 4-year cycle, actually the 4-year cycle, if you take the traditional 4-year cycle, we should be peaking in October 2025. Actually, we should be peaking in about 2 weeks if you use the traditional 4-year cycle. Problem is that none of the indicators that show us a cycle top have flashed a cycle top. So I don't think that we've hit a cycle top. Remember, I told you about the TGA account first. I also told you a while back, I made that video and I said, there's no way that this is the cycle top. This is the ultimate ultra cycle. I dropped that on the other channel, the Crypto Insider channel. I dropped the ultimate ultra cycle video. And now a lot of people, I heard 𝗷𝗫𝗪 actually came out and he said, look, it's probably going to be a 5-year cycle. And we should peak in Q2 2026. I don't think it's going to be Q2 2026 because in Q2 2026, that's when they replace Powell. I think it's going to be after Q2 2026 that we actually get that we actually get it. Let's see how long this.
Why is Bitcoin sort of not wildly off to the races yet? And it's this chart. Bitcoin.
He based it around the ISM.
This is a detrended Bitcoin.
The ISM can't move until the rates actually start cutting and we get into an expansionary cycle. ISM is the industrial sector optimism index, if you want to call it that, for simplicity. And I mean, we can quickly listen to this. I'll put it onto. There we go. I'll play it for us.
And it's basically the ISM, which is the business cycle. Remember, we've always said it's the business cycle, stupid. It is always the business cycle, stupid. And all of these people who claim it's the 4-year cycle based around this and that, they don't understand the fundamental of what the business cycle is, why there's a 4-year cycle in everything. And we've explained it, and we'll go through it in great detail tomorrow in our Everything Code presentation. But basically, it's following the ISM. And rates have been following the same pattern. You see, rates should have come lower. They need to come lower because we need to roll the debt. We've talked about this. That's part of the Everything Code, fundamental part. And ISM, because rates are so high, has meant that Main Street has been screwed while Wall Street's made money from debasement. Earnings versus scarce assets. This is the issue that they need to solve, and they need to get rates lower. They get rates lower. Why? Why do we have an elongated business cycle that looks like virtually no other other time? It's because, and I only just found this out redoing the work on the Everything Code recently, is that in 2021-22, they actually extended the maturity of the debt from 4 years to 5 years. So that extension of the maturity of debt has pushed out the business cycle a year. The 4-year cycle this time around is a 5-year cycle. We don't know what the next one will be until we see where they all get.
I agree with the 5-year cycle. I say Q3 2026 is when we actually top. I said it publicly. I made a video about it, so it's not the first time I'm saying it. It's not like, it's something that I've thought about for quite a long time. All right, so that's the correction. And again, I'm not buying anything yet. We're going to buy when we get to extreme fear. Just trust me, guys. I know that you want to look and you want to dig deep and whatever else. It's not about digging deep. There's like one indicator. The indicator is 100% accurate 100% of the time. It's fear and greed. Why? Because market cycles oscillate between extreme fear and extreme greed. Right now, we're in the middle. We do not buy when we're in the middle unless we have inside information. If you want inside information, subscribe to this channel because that's exactly what we give you. Or you subscribe to Frontrunners because in Frontrunners, there's a lot of inside information. I'm actually dropping another gem today in Frontrunners. I'll drop it in Frontrunners at in 5 hours. I'll drop it in front runners in 5 hours. In 5 hours, I will drop another gem in front runners. If you want to get into front runners, there's a link over here. Just use this link over here. Try it for a month. If you don't like it, you can leave. It's simple, and you can get your money back. Simple as that. Okay, let's move on to the next part of the show. This part makes me a little bit uncomfortable, right? You know why? Because I know what's going to happen here. What's going to happen is I'm going to say that I'm going to say that Tom Lee's ETH thesis is retarded. And then everyone's going to go back to Tom Lee and tell Tom Lee that Run said that he's retarded. Okay, I don't think that Tom Lee is retarded. I'm reading a tweet from Andrew Kang, who is someone that I really, really respect in this space. And what he says in that tweet, he says, Tom Lee's ETH thesis is retarded. And it got me thinking a little bit about Tom Lee and who he is and whether or not there's actually any merit in this tweet, right? So let's talk about Tom Lee first. So Tom Lee's a great guy. He's been on CNBC for a long, long, long time. In fact, I remember that I had him on my CNBC show in 2017 2017, I think it was. He's a great guy. He's always bullish and he's always calm. Man, you cannot stress Tom Lee out because Tom Lee's got a very simple theory, right? He knows that over time, when you look at stock markets, any stock market or any market trade is up and to the right. And so if you're bullish for long enough, ultimately, eventually you'll win. Regardless, like the bulls always win because even though there are a whole lot of kinks, generally in life, in markets just go up for a long time. So the best strategy in the world is just to be bullish because eventually you'll be right. If you're not liquidated, then eventually you'll be right. So Tom Lee's always been a great guy. He's always been extremely, extremely, extremely bullish. He's always gone on to CNBC and always been amazingly bullish.
You alluded to some of the places that could see the biggest impact.
Yes.
But can you take us through those? If you had to put a top 3 together about where you think the most activity.
Now most recently, Tom's become extremely, extremely, extremely bullish about ETH, right? He used to be extremely bullish about Bitcoin, and now he's pivoted to become extremely bullish about ETH. But the thing is that he's recently become the chairman of BMNR, right? Now you got to ask yourself, is he talking his book or does he actually really believe what he's saying? Because now he's conflicted. Before, he used to be an advisor at Fundstrat. Before, he used to be somebody who used to contribute on CNBC. And he didn't have a conflicted position. The thing now is that he's a chairman of an ETH treasury company. And his role as the chairman of an ETH treasury company is to go and talk up the book. That's why you're a chairman, right? You got to go out there and say, ETH is the best thing ever, ETH is the best thing ever, ETH is the best thing ever, ETH is the best thing ever. And so you got to ask yourself, when he talks, you have to ask yourself, is he saying this because he really believes it? Or is he saying this because because he's now the chairman of an ETH treasury company? And that's what Andrew Kang is calling him out on. I'm not calling him out. I do think there's a lot of merit in this tweet. But I'm not the one who said that Tom Lee's ETH thesis is retarded. So why does Andrew Kang say that Tom Lee's ETH thesis is retarded? So he says Tom Lee's ETH thesis is one of the most retarded combinations of financially illiterate arguments I've ever seen from a well-known analyst I've seen in a while. Let's break this down. Tom's thesis is predicated on the following points. Stablecoin and RWA adoption, the digital oil comparison. This one I agree with him wholeheartedly. Institutions will buy and stake ETH to contribute to the security of the network. And ETH will be equal to the value of all the financial infrastructure of all the companies, and then technical analysis. Let's talk about the stablecoin and real-world asset adoption first. Yes, the argument goes like this. Stablecoins and tokenized asset activity is increasing, and that should drive transaction volume, which should drive revenue and fees on ETH. And on the surface, that makes sense. But if you use a few minutes and a few brain cells to check the data, you'll actually find that this is not the case, right? So why did he say that? He said, look, even though there are a lot of tokenized stablecoins on ETH, two things are happening. One is that the network's getting faster, and two is that the assets aren't trading frequently. And he says that the assets that are trading frequently are actually going to other chains like Solana and Tron and much cheaper chains. He says since 2020, tokenized assets and stablecoin transaction volumes have increased 100 to 1,000x. Tom's argument fundamentally misunderstands how the accrual works and may lead you to believe that fees scale proportionately to the number of coins or the number of coins on network. And that's not the reason why. Why? One, because upgrades make transactions more efficient. Two, is because the stablecoins are going to other cheaper chains. And the ones that are staying on ETH are low velocity assets. Now, low velocity assets means that you don't trade them a lot because the transaction fees are too high. And so he says, look, will transaction volumes and fees generated by blockchains grow? Yes, but most of the fees will actually be captured by other blockchain with stronger biz dev teams. He says, when it comes to traditional transactions on chain, others see the opportunity and are aggressively taking over Solana, Arbitrum, Tempo, and all of those other ones. So he says, look, ETH doesn't actually benefit from all of this. Then he turns his discussion to digital oil comparison. He says, oil is a commodity. Real oil prices adjusted for inflation have been trading in the same range for over a century now. So I checked it out and I said, look, if oil is a commodity and if you compare it on an inflation adjusted basis, what does the chart actually look like? And he's right. On an inflation adjusted basis, oil has pretty much been trading in the same range for as long as this chart goes back. In fact, let's go even further back. As long as this chart basically goes back, oil has been trading on an inflation adjusted level at this basis. So what he says is, let's go back and try and find that. He says, so oil is a commodity. Real oil prices have been adjusted for inflation and have been trading in the same range for over a century now, with periodic spikes that revert. I agree with Tom that ETH could be viewed as a commodity, but that's not bullish. Not sure what Tom's trying to do here. Number 3, institutions will buy and stake ETH to contribute to the security of the network in which they are tokenizing assets. Question: have large banks and other financial institutions bought ETH on their balance sheets? No. Have they announced that they're going to buy ETH on their balance sheets? No. Do banks stock up on barrels of gasoline and oil just because they continually pay for energy? No. It's not significant enough. They pay for it when they need it. Do banks buy stocks of asset custodians that they use? No. So that argument falls out the window. And here I agree with him wholeheartedly. We can bullshit each other and say that, all the banks are going to buy ETH and put it on their balance sheet. But why do they not put oil on their balance sheet? They use oil much more than they use ETH. So why do they not put oil on their balance sheet? Next, institutions will buy and stake ETH to contribute to the security of the network in which they are tokenizing the assets. We've already been through it. ETH will be equal to the value of all financial infrastructure and companies. I mean, come on. Again, a fundamental misunderstanding of value, he says. And he talks about how they accrue value. And then he talks about technical analysis. Now, I'm not going to go into technical analysis because if you show me a chart, I can show you how it goes down. I can show you how it goes up. I can show you that. But I do think that we do need to be careful not to get caught up in the hype, because someone who was once a contributor, an optimistic contributor, is now invested in the book. And in order to make his company look good, he has to talk highly about ETH. And so that's all I wanted to point out. I wanted to point out to you that it's not that black and white, that you can't just listen to everything he says. A lot of people have been saying, yeah, but Tom Lee. Yeah, I get it. But he is talking his book, guys. I mean, you have to face it. He's no longer the uninvested, completely impartial, credible source of information, because now he is actually talking his book. Anyway, remember, guys, I didn't say, because, Tom Lee and I go back quite a long way. I didn't say that he's retarded or his thesis is retarded. Andrew Kang said it. I just read it. You remember that, right? Good. Let's check up on this Plasma launch. Okay, 7.5 billion. Plasma is this layer 1 blockchain for stable coins. I've got to learn a lot more about it. I've read all the literature about it. I don't know. I want to see why we need a stable coin chain. I'm going to do a lot of homework in that regard. All right. Couple of things before we go. Some formalities here, right? Number 1, today is your last day if you want to do the Bitfunded buy one, get one free. So here's how it works. Bitfunded is a prop trading firm. That means that you can trade using other people's money, but you have to pass a challenge first to prove that you're a good trader. So what do? You choose the size of the account that you want to trade if you pass the challenge. So let's say I want to trade a $25,000 account. You pay $250. You have to get 8% in stage 1 and 5% in stage 2. If you do, in stage 3, you're trading with real money and you keep 90% of the profits and they keep 10% of the profits. So it's basically, this is great for people who don't have a lot of money but believe that they're good traders, and want to trade big accounts, that is when you'd use a prop trading firm. Now, I think this is one of the best and one of the safest ways to trade because you don't wreck your account, specifically in down markets. If you're right, you're trading with other people's money. If you're wrong, the most you can lose is $250. Or if you take the base challenge, it's $79. If you want the buy one, get one free, there's a link below. Buy one, get one free. Use it over there. Then lastly, remember, if you want to come with the token 2049, there's 5 days left. And then afterwards, there's the Blowfin party. Now, they got Blondish at the Blowfin party. And you see, Crypto Banter is a sponsor. Also, Crypto Banter is a sponsor. Very good. Very, very good. What happened to Banter bags? They went to zero, bro. They went to zero. IDOs went to zero. All right, friends. I will see you again tomorrow. Big Friday Banter. I've got Yatsu and I've got Paul from Pantera coming tomorrow. So I'll see you again tomorrow. Until then, trade well, my friends.